Assalamu alaikum dear students. Welcome to the second lecture of ATX or F6 taxation. Tax ATX. Okay, lecture 2. Basically in previous lecture we stopped at the rules of saving income. Let me just give you the recap of saving income rules. Then today inshallah we'll apply those rules. Okay? And we are actually studying Finance Act 2022, which I did mention in my first lecture is valid for uh, June 2023, September 23, December 23, and March 24. Let's discuss how do we calculate tax for the saving income. Saving income. Dear students, saving income means simply interest income. We have few rules for the saving income. Number one, in saving income, there's a rule of starting rate band 5,000 with the tax rate is 0%. We have already discussed this in the previous lecture. If taxpayer, if basically, let's make it simple. If someone is a basic rate taxpayer, if basic rate taxpayer, if someone is a basic rate taxpayer, then that individual gets nil rate band of 1,000. If basic rate taxpayer, then nil rate band is 1,000 pound. Second, if an individual is a higher rate taxpayer, then nil rate band is 500. If someone is an additional rate taxpayer, then that individual does not get any nil rate band. If additional rate taxpayer, then no nil rate band is available in saving income. If someone is an additional rate taxpayer, then no nil rate band is available in saving income. And now let us try to apply these rules through examples. Let's take a question. Assuming that employment income is 60,000. Employment income is 60,000. Interest income means saving income. Interest income means saving income. The interest income is, let's say, 40,000. The requirement is calculate income tax payable. The requirement is calculate income tax payable. The requirement is calculate income tax payable. Now, how do we calculate income tax? Very important point, because in this question, we don't have only non-saving source of income. We do have saving also. So you have to make two columns. The one column represents non-saving income. Another column represents saving income. Another column represents saving income. Since there is no dividend income, so no third column. So let's just make a third column of the total. Employment income is a non-saving income, directly writing over here, which is 60,000. Interest income is saving income. So the total amount is 100,000. Personal allowance. Dear students, personal allowance is first deducted from the non-saving income, which is 12570. So personal allowance is 12570. Let us calculate the taxable income. Taxable income. 60,000 minus 12570, that results in taxable income of 47,430. 40,000 is here plus 40. I'm getting 87,430. Okay. Number when you need to now let us apply tax rates. First, the tax rates are applicable on non-saving incomes. So just put the heading income tax, income tax. Basic rate band, non-saving. The limit is 37,700 into 20%. 37,700 into 20%. So let me apply the 20%. I'm getting 7,540. Okay. Now, dear student, let me change the color. Now, dear student, please listen and listen carefully. The taxable income under non-saving is 47,430. Out of this 47,430, we have already taxed 37,700. So let us now deduct 37,700 from 47,430. Let's see how much is left. 47,430 minus 37,700. I'm getting 9,730, and that 9,730 falls in higher rate band because basic rate band we have already used, already consumed. Higher rate band, non-saving. The amount is 9,730 into, of course, 40%. So let's take 40% of this. I'm getting 3,892. Okay. Now let us move to saving income. Now, dear students, listen and listen carefully. A very important rule which I'm telling you right now. In the column of non-saving income, after deducting the personal allowance, if your taxable income is this amount, where I'm making a circle, even though it does not look like a circle, but please take it as a circle. This 47,400, basically in the column of non-saving, after deducting the personal allowance, if you get the result either 5,000 or more than that, then starting rate band does not apply on saving income. Repeat. If in the column of non-saving, after deducting the personal allowance, your result is either 5,000 or more than that, in that case, starting rate band concept rule does not apply because if non-saving income after deducting the personal allowance is either 5,000 or more, it means that starting rate band is already used. There is no starting rate band for the saving income now. So simply in this question, there is no starting rate band. Okay. Now another issue arises. Individual gets nil rate band also in case of saving income. If someone is a basic rate taxpayer, that individual gets nil rate band of 1,000. If someone is a higher rate taxpayer, that individual gets nil rate band of 500, and someone is an additional rate taxpayer, that individual gets no nil rate band in saving income. Now the question arises, how do we decide individuals tax paying status? Repeat, how do we decide individuals tax paying status? The decision criteria is, look at this, where I just made a circle. The total taxable income, which is 87,430. Since this total taxable income is more than 37,700, so this individual is a higher rate taxpayer. Repeat, how do we decide the tax paying status? We make this decision on the basis of total taxable income in the column of total. And total taxable income is 87,430. Obviously, it is far more than 37,700. So this individual is not a basic rate taxpayer. Logically, this individual is a higher rate taxpayer because the amount is less than 1,50,000. So obviously, it is more than 37,700 and less than 150. So definitely, this individual is a higher rate taxpayer. And whoever is a higher rate taxpayer, that individual gets nil rate band of 500. That individual gets nil rate band of 500. that individual gets nil rate band of 500. So all you need is just write a nil rate band, saving income 500 into 0% is obviously 0. So out of 40,000, 500 we have 500 we have applied the tax rate nil rate band 0%. So from 40,000, just deduct 500. The remaining amount is 39,500. That falls obviously in higher rate band. So saving income 39,500. How did I get this 39,500? Because saving income is 40,000. Out of that 4,500 is tax in the nil rate band. So obviously the remaining amount is 39,500, and the entire amount falls in higher rate band because basic rate band is already utilized by the non-saving income. Once any band is used by any income, it will not be created again for another income. Like non-saving income has already consumed, has already utilized the basic rate band. So it is used for every source of income. Now saving income will not get any other basic rate band because it is already being used by the non-saving income. So that is why the entire 39,500 falls in a high rate band where applicable tax rate is 40%. So 39,500 into 40%, I'm getting answer 15,800. So simply add all this. 3892 plus 7540. We are getting income tax liability of 27,232. Income tax liability. Income tax liability is 27,232. Okay. Now let's see one more question. Employment income. Assuming we are having an employment income of 15,000. Saving income is assuming 20,000, and the requirement is same. We just need to calculate income tax payable. The requirement is same. We need to calculate income tax payable. Again, we have two sources of income, so you have to make three columns, one for the non-saving, another for the saving, and the last one is for the total. Non-saving, saving, and obviously total. Non-saving is 15,000, saving is 20. So altogether we are having 35,000. Dear student, personal allowance is first deducted from the non-saving income, which is 12570. 12570. Okay. We'll have the taxable income from 15,000. From 15,000, I deduct 12570. We are getting taxable income 2,430. 20,000 over here. So it results in 22,430. It results, okay. Now let us calculate tax. Obviously, first we apply tax rate on non-saving income. Income tax. Basic rate band. Non-saving, which is 2,430. Simply apply the 20% tax rate. Let me use the calculator. 2,430 and 20%. I'm getting 486. Now, dear student, listen and listen carefully. I want to change the color. Now, listen. Taxable income after deducting the personal allowance in the column of non-saving is less than 5,000. You can see this. The taxable income after deducting the obviously personal allowance in non-saving column is 2,430, obviously, which is less than 5,000. Since the taxable income after deducting the personal allowance in the column of non-saving is less than 5,000, that is why dear students, that is why starting rate band concept comes into action. Now the question arises, how do we apply the starting rate band rule? It's very simple. But let me tell you one thing again. When does starting rate band comes in the question? Will come in the question whenever taxable income in the column of non-saving is less than 5,000, only then starting rate band comes into action. Now listen, the starting rate band limit is 5,000, but you will not be getting entire 5,000 because the taxable income in the column of non-saving is 2430. So logically 2430 will be deducted because out of 5,000, 2430 is already consumed by the non-saving income. So 5,000, 2430, we are left with 2570. So this individual is entitled to get a starting rate band, but only 2,570 because 2,430 is already consumed. Now, starting rate band, saving income, the amount is 2,570 into the tax rate, which is 0%, it is 0. Starting rate band, saving income. Okay. Now, let me repeat again one more thing. If this answer, which is 2430, if this answer had either 5 or more than that, then in this question we would not apply any starting rate band. Since the taxable income in the column of non-saving is less than 5,000, that is why starting rate band has applied in this question. But again, you are not getting entire 5,000 as a starting rate band because 2430 is already utilized by the non-saving income. So the remaining starting rate band which is available to you is 2570. Okay. Now another issue arises for the nil rate band. And in saving income, actually nil rate band depends on individual's tax paying status. By looking at 22,430, by looking at 24,430, we can easily decide this individual is a basic rate taxpayer. And whoever is a basic rate taxpayer, that individual gets nil rate band of 1,000. And let me repeat again, how do we decide the individual's tax paying status? By looking at the total taxable income in the column of total. So since the total taxable income is less than 37,700, in this question the total taxable income is 22,430, which represents this individual is a basic rate taxpayer, and whoever is a basic rate taxpayer, that individual gets nil rate band of 1,000. So you will also be getting the nil rate band, saving income, 1,000 into 0% is 0. Okay. Basic rate band. The remaining saving income obviously falls in basic rate band. The amount of the saving income is 20,000, but out of that 20,000, 2470 we have dealt in a starting rate band, 1,000 in nil rate band. So let's see how much is left to be taxed. So from this 20, we will deduct 2570, we'll deduct 1,000. Let's see the remaining amount. 20,000 minus 2570 minus 1,000. I'm getting 16,430. I'm getting 16,430. So 16,430 that falls in basic rate band into 20%. 16,430 into 20%. So I'm getting the answer 3,286. Income tax payable. So the income tax payable is 3,772. Now let's deal with one more question. Assuming the employment income is 12570, that is an employment income. Okay. No, do one thing. Let me change the question. Assuming the employment income is 10,000. Interest income is the saving income. Interest income means saving income. Interest income means saving income, and we have Let's say interest income 15,000. The requirement is very simple. You just need to calculate income tax payable. And I would request, dear students, I would say pause the video, attempt the question, and then you can unpause the video. Repeat, pause the video, attempt the question, and then unpause the video. I hope now you are watching after attempting the question. Non-saving, saving, and the third column is total. Obviously, employment income is a non-saving income, which is 10,000. Saving income is 15,000. So altogether we are getting 25. Personal allowance, obviously you need to deduct first from the non-saving. But still entire personal allowance we have not used. The limit of the personal allowance is 12,570. Out of that we have only used 10,000. So remaining personal allowance will be deducted from the saving income, which is 2570. So 15,000 minus 2570, we are getting 12,430 taxable income. Okay. Let me put the heading income tax. Now dear son, listen carefully. In this question, let me change the color. In this question, taxable income after deducting the personal allowance in the column of non-saving is 0. Taxable income in the column of non-saving is 0, which means that entire 5,000 starting rate band is available to this individual for saving income. Repeat. In this question, whoever this individual is entitled to get complete starting rate band of 5,000 because non-saving did not use any of that. Why? Because taxable income in the column of non-saving is 0, which means that starting rate band, obviously the saving income, 5,000 into 0% is obviously 0. Now we need to check and we need to look for the nil rate band. Look at this, 12,430. Since this amount is less than 37,700, so this individual is a basic rate taxpayer. And whoever is a basic rate taxpayer, that individual is entitled to get the nil rate band of 1,000. So nil rate band, saving income, 1,000, 0% is 0. Basic rate band, saving income. So from 12,430, we need to deduct 6,000. From 12,430, we need to deduct 6,000. 12430 minus 6,000. That results in 6,430 into 20% because 6,430 obviously falls in basic rate band. So we are getting 1,286. This is your income tax liability. This is your income tax liability. Now dear students, I strongly believe you should be having a, I would say, really good idea how to deal with starting rate band when it comes into action. Because look at this, in the first question, in the very first question of this video, look at this. We did not get any starting rate band because the taxable income in the column of non-saving is more than 5,000. Whenever taxable income in the column of non-saving is either 5,000 or more than that, then you will not be getting any starting rate band. Okay, we did not get any starting rate band in this question. After that, question 2, the taxable income in the column of non-saving is less than 5,000. It is 2,430. That is where starting rate band comes. But you will not be getting entire 5,000 starting rate band because out of that 5,000, basically 2,430 is already being used. So the remaining limit in the starting rate band is 2570, and it can be seen in this question. The starting rate band was 2570. Finally, in the column of non-saving, the taxable income is 0. Since the taxable income in the column of non-saving is 0, it means this individual gets entire 5000 nil rate band. So nil rate band of 5000. So I strongly believe you should be having a really good idea about relating to starting rate band. Okay. Now let's talk about the third income, which is dividend income. Third income, which is dividend income. Okay. Basic rate band, we know from starts from £1, goes till 37,700. Higher rate band 37701 till 150. Additional rate is 1,50,001 and so on. For basic rate band, if the dividend income falls, in basic rate band, then the tax rate is 8.75%, which I did discuss in my first lecture. Okay. In case of higher rate band, it is 33.75%. And in case of additional rate band, it is 39.35%. And how do we calculate tax? The sequence of calculating the tax is, first you have to tax the non-saving income. Second, you will go for the saving income. And finally, in the end, in the last, dividend income is tax. And these are the tax rates applicable on dividend income. And you can see that why HMRC says you should be taxed dividend income at the end. Uh, it's just a rule, of course, but a little bit logic behind the rule, which I can see, since the tax rate are very low in the dividend income. That is where the HMRCs and taxation authorities in UK, they are asking you to calculate tax on the dividend income at the end. Okay. So in that way, there is a chances that basic rate band would be already used by either non-saving or saving income. So most of the time, your dividend income will be taxed somewhere on 33.75%. Because we have already made one understanding. If the band is consumed by any income, then it is utilized for every income. Let's see the question, so that you should be having a really good idea how do we calculate tax rates when we have all three incomes. I'm just writing directly the result. Assuming we have non-saving income, we do have assuming saving income. Let's say this time you have been given dividend income also. So you will be, instead of 3, now you'll be making 4 columns. Non-saving, saving, dividend income, and total. Non-saving is assuming 25,000. Saving income is let's make it 20. Dividend income is 15. So the total is going to be 60. Great. Assuming the non-saving income is 25,000, saving income is 20, and dividend income is 15. So altogether the total income is 60,000. Personal allowance, first it is deducted from the non-saving income 12570. 12570. After deducting the personal allowance, you will get taxable income. After deducting the personal allowance, you will get taxable income. So 25,000 minus 12570. The taxable income is 12,430. 20,000 over here, 15 is here, plus 35. So I'm getting a taxable income of 47,430. First, you have to tax the non-saving income. Let us first calculate tax on non-saving income. Income tax, basic rate band, non-saving. Actually, non-saving income does not get any nil rate band, okay? So now listen. Taxable income in the column of non-saving is 12,430. Obviously, entire 12,430 falls in basic rate band, where applicable tax rate is 20%. So 12,430 into 20% gives me 2,486. 2,486. That's a basic rate band. Okay. Now, dear student, we have to apply tax rates on saving income. But before applying tax rates on saving income, let us check, does this individual uh, is entitled to get starting rate band? I would say no. Why? Because in the column of non-saving, the taxable amount, which is 12,430, this amount is more than 5,000. And we have already developed one rule, one understanding. If in the column of non-saving income, taxable income is either 5,000 or more than that, then you will not be getting any starting rate band. Since this amount, we are making a circle which does not look like a circle, is more than 5,000. So you will not be getting any starting rate band. So simply this individual is not entitled to, any nil rate band. Okay. Oh, sorry, any starting rate band. So this individual is not entitled to get a starting rate band. Why? Because taxable income in non-saving column is more than 5,000, so starting rate band is not applicable. Now let us check for the nil rate band. Look at this amount. In the column of in total, the total taxable income in this question is 47,430. Total taxable income in this question is 47,430, which is obviously more than 37,700. So by looking at 47,430, which is more than the limit of the basic rate band, which is 37,700, since the total taxable income is 47,430, which is more than the limit of the basic rate band, so this individual is a higher rate taxpayer. Whoever is a higher rate taxpayer gets nil rate band of 500 for its saving income. Nil rate band, saving income. 500 into 0% is obviously 0. Now, this amount of the saving income is 20,000. Out of that 20, 500 is already taxed in nil rate band. So how much is left? 19,500. The saving income amount is 20,000. Out of that 20, 500 we have tax in nil rate band. So the remaining amount is 19,500, and entire 19,500 actually falls in basic rate band. Basic rate band, saving income, 19,500, and obviously into 20%. Into 20%. So 19,500 into 20%, we are getting 3,900. So dear student, we have taxed the non-saving income, we have taxed the saving income. Now the time has come that we have to calculate income tax on dividend income. But a very important point relating to dividend income. Before applying any tax on dividend income, any tax rate on dividend income. For dividend income, dear student, listen and listen carefully. Every individual, irrespective of his or her tax paying status, every individual gets nil rate band of 2,000. Repeat. In case of dividend income, first 2,000 of dividend income actually falls in nil rate band. So every individual, irrespective of the tax paying status, either it is a basic, higher or an additional rate taxpayer, whoever it is, every individual gets nil rate band of 2,000 only. So dividend income amount is actually 15,000, but out of that 2,000 definitely falls in nil rate band. Nil rate band dividend income, which is 2,000. Where applicable tax rate is 0%, so obviously 0. Now, dear student, we need to check how much space is left in the basic rate band. Because the limit of the basic rate band is 37,700. Already 12,430 is used by the non-saving income, 500 saving income, then 19,500 is utilized by the again saving income, 2,000 by the nil rate band of dividend income. So let's see how much space is left in the basic rate band. From 37,700, let us deduct 12430 minus 500 minus 19,500 minus 2,000. Dear students, still I am getting a space of 3,270. So basic rate band, which is having a limit of 37,700, the entire limit is not utilized. Still there is a limit of 3,270 left in the basic rate band. So basic rate band, saving income, 3,270. Oh, no, dividend income. Sorry. Because we have already taxed, okay, dividend income. So basically 3,270 of the dividend income falls in basic rate band because we don't have any more space in basic rate band, where applicable tax rate is 8.75%. So 3270 into 875, I'm getting 286.125, but leave that 1.125. Okay. So the dividend income is 15,000. Out of that 15, 2,000 we have tax in nil rate band, the remaining 3270 in basic rate band. So now whatever amount of the dividend income is left on which we did not apply tax yet, the entire amount actually falls in higher rate band. So from 15,000 of the dividend income, you have to deduct 2,000, which you have already taxed in nil rate band, and 3270. So the total amount of dividend income is 15, less 2,000 nil rate band, less the amount which we tax in the basic rate band, which is 3270. So the remaining amount actually falls in higher rate band, 15 minus 2000 minus 3270. We are getting 9,730. 9,730, and applicable tax rate is 33.75. These tax rates will be given to you in exam, don't worry at all. Otherwise, you will automatically remember after watching few more lectures. I'm getting answer 3,283.875. So with a little bit rounding of 3,284. Let me use a calculator again. 9730.3375. I'm getting 32. Okay, this is the correct answer. So 2486 plus 3,900 plus 286 plus 3284 plus 3284. So dear student, I'm getting answer 9,956. Let me check again because sometimes arithmetical error creates problems in the video lectures. 2486 plus 3,900 plus 286 plus 3284. So income tax liability is 9,956. Income tax liability. Dear student, income tax liability is 9,956. I strongly believe. Now you should be having a really good idea how do we calculate tax, but don't worry at all. The coming lecture will also be on the same area, how to calculate tax. So we'll be doing more practice, inshallah, in lecture number 3 on the area of how do we calculate income tax. So simply I would say thank you very much for watching this lecture. Have a nice life.